of people coming into this particular industry. I know you have committed almost like you're full into the Bitcoin, blockchain, digital asset world, right? You're just pretty full in.
No question.
Yeah, so we're going to get to that at the very end of this, just talking about why so many, and it's a particular, I notice it's a particular personality that's coming into the space early. But the young guys in the Bitcoin community are, I think you're going to have a wave of guys my age, your age, that are well balanced. They've been through, they've lost hundreds of millions of dollars over 30 or 40 years. And it's not, the only way to learn how never to do that again is to do it once. Right. And that makes a powerful person that can come back from losses. I won't invest in anybody that has never had a loss. They scare the heck out of me, dude.
They do. And I should have scared the heck out of myself before I had that loss, and I'll take you back because I know you're a lifelong trader. I was filled with hubris in 1998, 34-year-old young man. I made a tremendous amount of money in 96 and 97. And so therefore I thought I had it figured out, Gary, and I got destroyed in August of 1998, destroyed in about a 12 trading day period. I think I lost 33% of my fund's capital. All my own personal money was in that fund. And so it was devastating. And but it prepared me for 2008. I always tell people 1998 prepared me and probably saved Skybridge from going out of business because I was well prepared in 1998. And of course, I got hit pretty hard last year, but last year to me was more volatility than anything else. So I held the assets. The assets went down in value. The assets are now back through where they were when they started going down in value. And so people that were just patient got rewarded. So it's different. I haven't operated with any leverage. I've been very, very patient. Like you, I'm a believer in the blockchain, but I also recognize it's still early adopting. And I just want to frame this for your listeners and viewers for a moment. If you read in the paper that Kitty Hawk, they created Flight, and it was 1903, and the Wright brothers created Flight, and it was 14 years later, that's the duration of Bitcoin, about to be 15.
Right.
If you said 14 years later in 2017, how many naysayers were there in 2017 about commercial aviation and the adoption of this technology known as flight, where people would actually board commercial airplanes and fly themselves around the world? In 1917, 14 years after the origination of flight, many skeptics said it would never happen. And so I just want to remind people that there are technological adoption curves for products, and Bitcoin is just scratching the surface. We are, with Bitcoin, about where the browser was in 1998. We have about a 4% saturation for Bitcoin. I just want to frame this for you. $88 trillion in retail investing, less than 1% of that is in alternatives, hedge funds, private equity, esoterica like Bitcoin. So just imagine if we get a Bitcoin ETF approved in the United States, and you and I have been around Wall Street a very, very long time. Wall Street pushes product. Products on Wall Street are sold, they're not bought.
Yeah, I think that's very, very important.
I just want you to imagine the unleashing.
Say that again, though, Anthony, that products are sold, they're not bought by Joe Consumer. Can you discuss that? Because I was on a conference with about 4,000 people, and they were talking about, well, my 88-year-old mom's never going to buy this. And I'm like, no, your 88-year-old mom's going to be sold this. Right. They package this up. Talk about that a little bit, because that's a big deal.
So when I got to Wall Street, my old boss, who's 89 years old now, a terrific guy, he said that we feed the ducks. If the ducks are quacking and they want bread, we feed them bread. If they want something else, we feed it. He holds these analogies. If you're going into a man's house and he wants white shirts, bring white shirts. If he wants blue shirts, bring blue shirts. His point was we make product on Wall Street and then we sell it, but then we're looking for who has demand and who doesn't. But in the case of something like Bitcoin, I envision a scenario where asset managers around the world, they put it in their global tactical asset allocation strategy. So Gary Cardone walks in, he's a super wealthy guy, and they say, well, here's what we're going to do. We're going to give you some bonds, some stocks, some private equity, some real estate. Oh, by the way, we're going to give you some digital property, and we're going to start you, Gary, with a 1% allocation to Bitcoin. And in the context of all of that, you're buying that asset allocation from that vendor. And so that's what I mean, that the products are sold and not bought. You know, it's not necessarily the buying decision by the end user as much as it is, it's on the shelf. I got to make my quota. I'm going to push this product off the shelf. And that happens on Wall Street, whether people like that or not, they want to be cynical about it or not. That happens on Wall Street. A firm like BlackRock, the largest asset manager in the world, is not going to put an ETF of Bitcoin, a cash ETF in place without massively selling it to its customers. You know, and so just think about this. If you have a $2 trillion global capital asset allocation portfolio at BlackRock, and they just decide to put 1% of that, okay, think of the magnitude of what we're talking about, you know? And so, you know, be 20, 30, 40 billion dollars into Bitcoin. And you know, as a trader, it's the incremental demand that moves price.
That's right.
And we don't have a lot of supply of Bitcoin. You know, you look at the on-chain dynamics. People are warehousing and not selling their Bitcoin.